o'clock now on Tuesday the 8th of November. I'm going to run through then a bit more of an in-detailed look as to what to expect from the US elections from this evening, how we're going to tackle it, how the market might react in terms of different asset classes, and how we're going to try and navigate the news flow and the timings of that to try and hopefully capture a bit of an advantage, let's say, being on the front end of the news coming out is going to be critical in order to action trades over potential bouts of volatility, and then identifying when those periods of market movement might well be at their strongest. Much like in Brexit, obviously it came down to really the initial first big names that were coming out. That was kind of timed around Newcastle and Sunderland, and when Sunderland voted to a stronger degree to vote to leave, although that was the right direction, it was a lot more leaning towards lean to leave than was actually expected by the polls, and therefore it triggered an immediate downside reaction in terms of the pound. And what we're going to talk through here shortly is there's going to be potential moments like that when tonight starts to unfold, depending on how the key swing states start to come in. So first of all then, let's just take a look at a couple of the headline kind of readings to give you a framework of what we're dealing with here, and then we'll run through it from there. So starting off with the current state of play from what the polls are telling us. Now, if you remember rightly, when we went into Brexit, the whole point is that the market was priced at around a 90-10 split, and that was very much evident with the bookies odds, which were very similar. Actually, it got up to 90% the moment the polling booths closed at 10 o'clock and Farage conceded defeat in his own private kind of exit poll. That was when sterling, that's cable, traded in the futures, year-to-date highs around 150. So at that point, it was all looking swimming in terms of the performance of Remain was pretty much bedded in. If you remember, though, the polls were much more closer in terms of the margin. I think it was only around a 4-point advantage, or less than that, 3.5-point advantage to vote to Remain. That's what the average poll of polls was telling us in Brexit. The reason why the market was very disbelieving of the credibility of that was because of the inaccuracy that we saw, particularly out of the general election, when obviously it resulted in a strong majority for the Conservative Party, and what was more broadly expected was for a hung parliament situation, which obviously did not occur. And then separately, the Scottish referendum, likewise. So polls had pretty much been discounted. And even with the polls, they did call Brexit wrong as well. But it was the bookies odds, which was more reflective of the market's positioning, which caused such a dramatic, obviously it was the largest intraday fall in the pound that we've ever seen. More than 11% in one day. And obviously from 150, that was the year-to-date high before the results started coming in. So looking at the US, what we have here is Real Clear Politics. This is like the main benchmark website which all the market will be looking at. This is what the investment bank use to calculate as well with their models. This isn't just like an off-the-shelf website. This is the legitimate go-to one-stop shop for factual information regarding the US election. As you can see here, RCP is their average, let's say their version of the poll of polls. Bloomberg, Economist, YouGov, a lot of these names you'll be familiar with. Obviously the ABC one, which has been market moving over the last 2 weeks. Fox News, CBS, NBC, and we go all the way down. So combining values of all of these gives at this point Clinton 47.2, Trump 44.2. So on the polling side of things, certainly Clinton has an advantage of around 3 points. And actually this is eerily similar to the Brexit situation, of which we'll shortly see is also frighteningly like what's priced in from a bookie's perspective as well, whether that's any guide or not. Looking here then, on that note, this is where we currently stand. Obviously we've had this kind of V-shaped form over the last week. This was the reopening of the FBI's investigation into Clinton and her emails and so forth. That, of course, led to Trump gaining in some polls a lead for the first time since really early this year. Odds plummeted for Clinton, but still a fairly comfortable advantage, but we're back up towards pretty much the widest in which the expectations have been. 82.3% to 17.4%. That's in terms of the bookies and what they're offering at this point. Let's look at Nate Silver. Now, Nate Silver is a very interesting chap, which we've spoken about a couple of times. And again, just to put in context, this website that he owns and runs, 538.com, is, in addition to RCP, is probably, these are the two most influential websites tracking the politics and US elections. RCP, more factual. This website is more about a model of which statistically has been put together, running various different scenarios and so forth. And more importantly, Nate Silver, who created these models, correctly predicted all 50 states correctly back in the last election in 2012. And before that, in 2008, correctly predicted 49 of 50. So he has an extremely strong track record with his mathematical model in combination with polls of calling the election correctly. And therefore, the market looks at what he says with great importance. So looking at his measurement on the poll-only forecast on who will win the presidency, Nate Silver is currently ranking it at 71.9% for Clinton, 28% for Trump. If you were to put that in electoral college votes, that would put Clinton at 302.4, Trump 234.7. Of course, the magic number of which we'll be looking out for this evening is 270. Quick recap then, in terms of the kind of geographic representation of where are the key areas that you as traders are going to be having to watch. And this is back to the RCP website. This is based on pollings, and really it's not so much the darker shades that we're concerned about. Places like California are what would be deemed as, I would say, a solid state for Democrat or for the Democratic Party, and therefore really it's not too much to focus on there. Likewise, if you were to look at some of these other darker shades of red, Oklahoma, Wyoming, for instance, and going further east, then again, these are kind of solid as a rock Republican historically, and in terms of how favorably they're leaning that way in the latest polls. What we're more concerned about, certainly, is the grey areas. And really, this is where the kind of balance of powers is going to lie in terms of when the results are coming out, how the market's going to react. Let's not forget that financial markets move on future expectations. That means that it's only going to have to take a couple of the key swing states to come in, then the market will already start pricing in the end result, irrespective of the fact the end final formality of the result being known has not yet come out. Very much so, that's kind of what happened with Brexit. That Sunderland-Newcastle situation caused around a 4-5% depreciation of the pound. We then kind of recovered, went sideways until really London started to come in, and then it was the element of the low participation rate, somewhat impacted by the bad weather, in combination with an area like Swansea, which turned against expectations and voted to leave, that then caused another wave of selling pressure to then go in excess of 10% lower in the cable pair. So when looking at these swing states, obviously geographically there is also, given the size of the land mass of the United States of America, there's a time zone differential between the east, central and west coast. And so when the pollings are closed, and we're going to look at those timings shortly, what is going to be key here is the East Coast ones inevitably will be the first for their polls to close, and therefore could be equally the first that we hear from exit polls and also final results. And if you look at where the swing states are largely situated, it's predominantly on the East Coast are the ones that we're concerned about. Because if you think about places like Nevada, for example, they only equate to 6 electoral college votes. And remember, this isn't a popularity contest, it's about the college seats. Even if you're 0.1 over percentage-wise in popularity or in actual end result for one state, that means you capture all of those college votes. There is no splitting of that. And so even a close-run race, as long as it's being pipped by a certain degree, that means you secure the entire college votes for that area. So looking at here, Florida obviously is the one to keep a very close eye on. That is the biggest by quite a large margin in terms of seats or votes. That's 29. The other ones, obviously, where you've seen the campaign trail hitting hard from a Democratic and Republican point of view, because they've been looking, there's no point them going to already solid states. What they need to do is tip the balance for those undecided voters who are sitting on the fence to push them one way or the other. And so North Carolina is really key. Georgia 16, North Carolina 15, Virginia 13, Pennsylvania 20, Ohio 18, Michigan 16. Then I would say it almost scales back in importance in size as we go from east to west coast, and also the timings are going to become less relevant, because at that point we should have already accumulated enough results out of the swing states on the east side to then formulate a forward-looking expectation of who has won this presidential race. So that's the kind of the key way to look at these. If I was going to make a list of, I would say, key states to punch into your kind of search parameters or on your radar of results to be looking for, these are the key ones. I would go on RCP and I'd start making a definitive list of all these grey areas, and I'd probably rank them in terms of 2 ways. One, the size of votes that they represent, and secondly, the timings in which you're expecting them to come out. On this point, let's just have a quick look at this chart here. So let me make this a bit bigger. What I'm sharing with you here has been put together by the chaps at Danske Bank Research, and I think it's a worthwhile study is to go back and look at history. And the nearest point that we can do that is to go back to 2012 and just see how the results and timings played out, to get an expectation then of potentially what we might need to look for. So this was 2012, and this is looking at CET is Central European time, so just as a guideline, so this would be 1 hour ahead of us in London. The first polls then closing, so let's stick with CET, so midnight. The first results start to come in from Vermont and Kentucky at 1:05. Romney then won Georgia at that point. Obama won Pennsylvania. So you can see here, the reason I've identified these is these are 2 key swing states. Then Romney wins Arizona, North Carolina. Obama wins Ohio. And then at that point, it was actually at 5:12 to 5:38 is when the TV network stations started to call an Obama win. So looking at timings wise, the way that 2012 played out, it was actually just after 4 o'clock in the morning by the time that it was clear cut that Obama had won at that point. The rest then, the other key point of interest here that you guys need to be aware of is the Senate. And shortly after the presidency vote was known, it was only about half an hour, and then we knew that the Democrats had also won the Senate. So if you remember, the market is also looking for who is going to have control of the 2 chambers of Congress. So i.e. the Senate is the key one, because that is what is tipped by most analysts and polls to go back to Senate control, because obviously both are controlled Republican, and this will define whether there is still a political gridlock, so to speak, or whether or not there could be the possibility of a clean sweep in either direction. that meaning complete Democratic or Republican control. So I think that's quite interesting, just to have a look at the overall, the way that's the presidential and the congressional election, which is going on today as well, might pan out. So the presidency, then the Senate, then the Republicans won the House, that came afterward. Okay, this is also, I'm going to send these out to you guys, so do not worry, you'll have all this research in your inbox to have a good look in advance. But this is all of the 538 electoral votes in total, 270 to win. This was looking at 2012. And what I want you to look at here specifically is, this is the poll closing times, and this is still the expectation generally of how things are going to play out this evening. This is the time, the state call time in 2012. So as you can see here, things like Kentucky, for example, the polls closed, it took approximately an hour and 5 minutes before the result was known. Now if you scroll down, it's not all. In America, every state kind of does their own slight different way, and so there's no specific set timing on how quickly they turn these around. And again, this is not an exact science, this is just a benchmark to give you an idea. But you can see here, when we started getting down to the blues, so Connecticut, Delaware, Illinois, Maryland, Massachusetts, they all came, the polls closed at 2, results were known exactly 1 minute after. So there is actually a discrepancy between individual state and how quickly they turn around those results. So you need to be definitely aware of that, because when we start getting down to the key ones, and this is being denoted by the green color, Georgia, Michigan, Pennsylvania, and so on. Remember, these swing states, these are all the same names in 2012, which we're anticipating again in 2016. This is quite typical for the way that generally their political view is aligned in those particular regions. But what I want you to look at here is that, generally speaking, there is a bit of a pattern emerging with the swing states particular, because they know, as an individual area, as well as the market and as well as politicians, that that's where the balance of power lies. And if you look at it, the credible states, or let's say the solid states, the results tend to come out pretty quickly. But if you look at the time differential of the swing states, there's a good hour and a half it took before Georgia came out, an hour and 6 minutes for Michigan, nearly 2 hours for Pennsylvania, and it gets longer and longer, if so to speak. So actually, even though the polls are closing, and things like Florida, Georgia, North Carolina, London time, they close at around between 12 to 1 a.m., the results of those might not actually start coming out till around 4 or 5, potentially. If we look at some of them scaling down, as you can see here on the vote projections, and this is exactly what TV networks and us here at Amplify will be doing, is we'll be keeping a running tally of the results state by state as they come in, to then formulate a projection as we get closer towards 270. Obviously, as you can see here, geographically, strongholds like, let's say, California, for example, which is the biggest populous area of the US, 55 votes, doesn't come till quite late in the day, and results were actually not until around, well, our time, we're looking at 4 or 5 o'clock in the morning. But that's obviously key, and as you can see how 2012 played out, it was really once those strongholds started coming out, then the balance of power started to shift, and it became quite clear that the Democrats were going to hit 270 quite early on. The other thing here as well is that you can see of the swing states, in 2012, Obama actually lost Georgia, or let's say, but then they started to come in and actually they started to tally up in terms of all the other swing states. These are actually let me just get this straight, these are Hillary Trump projections that they've done. So this is Danske Bank's own internal view on how they think this might play out in terms of who's going to win these seats. It's probably a combination of their own modelling and the recent polls. But as you can see, the 270 might not be hit until we get literally till about 5:30 in the morning. So obviously I'm going to be here all night long, Lionel Richie. Sorry to spin the Lionel Richie line, but it is going to be all night long, I'm afraid. And obviously, for you guys, it's been communicated that you're going to kind of have a bit of a cut at 4 o'clock in the morning because you guys have got to be appropriately risk managed. But obviously, if the market's still moving, then we're still involved. The ball keeps rolling. Then no sleep allowed, I'm afraid. You're just going to have to battle through. Moving on. So that's the kind of timings to look out for, and this is going to be critical. Now let's have a look at poll closing times, just to give you a reference point. What I have here is a map, and really this just solidifies what we've just talked about in terms of the location of the East Coast being first, and it's just a time zone, let's say, moving east to west in terms of when we can expect those results to start hitting. Again, I'll make all of these available so you can have a look in advance. One thing to be aware of, I did see ABC News, and obviously ABC News is one of the influential pollsters that has moved the market. Certainly did last week when Trump took that 1-point lead for the first time since May when that FBI investigation was reopened. And so on election day, ABC News says there is a strict quarantine on any news coming from early waves of exit poll data until 5 p.m. Eastern Time. By about 5:45 Eastern Time, some initial demographic information about voter turnout will be available on abcnews.com. So we're looking at, I guess, that extrapolating that out, 10:45 and 11 o'clock, we might have participation rates. Now, if you remember, participation rate was extremely important for Brexit. Because if you think about it, it was, leading up to Brexit, was all about a country's sentiment, about its dissatisfaction with the current state of play and Europe in general. And actually, before Brexit, everyone you spoke to who wanted to vote to leave, you could not shut them up. I mean, that was kind of my experience. They were so passionate about their view and their argument and why we should leave Europe. It was so overwhelmingly forceful. Whereas those who wanted to remain were a bit nonplussed. They were like, well, the economic argument's so strong, there's no way that leave is going to win, so therefore they were less incentivized to vote. Then you had the combination of bad weather, which restricted a number of people. I know for one in central London it did, because a lot of the tube networks were down. And then actually that participation rate, and let's say in London, which was down nearer 2% than what expectations were, had a dramatic effect on the end result when it was so close in terms of the margin. And so actually these kind of demographic informations we'll get on voter turnout should be very interesting. And it's going to be something certainly which I'll be looking at when that comes out, because I would imagine, let's say generally speaking, Hispanic, the African American turnout rates tend to be slightly lower than the white American, and therefore I would say those who are kind of Trump may be more incentivized to just go out there and vote. Because when you're looking at 2012 on a eligible voting person ratio, only around 54.6% of people who are eligible to vote in America voted in 2012. And so, that's not a great deal. And turnout, I think, for me, I don't think it's going to be as clear-cut as Brexit, but certainly I think a low turnout might be more positive for Trump, in my opinion. Okay, let's move on and let's have a look at asset classes and how things might move. And then we'll look at the charts and we'll kind of technically see then how the market might react. So this is the Bloomberg kind of guide of assets, and Trump win, a Clinton win, or a Democratic sweep. And a Democratic sweep meaning that they also win the Senate, the House, as well as the presidential, the Oval Office. So that's what's deemed as a clean sweep. I don't think many people are talking about a Trump clean sweep. That's a viable possibility, but I'd say that a clean sweep on both sides, I would put only at about 5 to 8% probability. This is from, generally I'm getting that number from my own kind of expectation of what I've read, and most investment bank calls, I would say, put that at the very low end of the scale of potential outcomes. What's most likely to happen is if you have a Trump win with a split Congress, or a Clinton win just the opposite way round. So looking at the way that stocks might react, and really I think the last week or two is your best guide as to how things might shape in terms of market movement overnight, is that a Trump win is negative stocks with increased volatility. That makes sense. I think the way that we've seen the rally, the gap up yesterday on the clearance of Clinton by the FBI on their latest investigation only ratifies that view. A Clinton win, as we saw yesterday, is relief. And so I think to that degree, a Clinton win then is the opposite, relief rally after recent slump on Trump's rise. However, drug makers, banks underperform on further regulatory fears. A Democratic sweep would be a relief rally again. The worst case does not materialize, but there's bigger downside for drug makers and banks specifically. These are all specific industries in which Clinton has targeted more specifically to have onerous regulation. I don't know if you remember that story about that chap in America, that lovely guy who was charging people extraordinary amount for, I think it was cancer treatment drugs, just because he had a bit of an arbitrage on the amount margin that he was making. And so she wants to cut that out. In terms of the US dollar then, looking at currency markets, because I know this is what a lot of you guys will be viewing. US dollar, a Trump win would be negative dollar versus developed currencies, especially the Swiss franc, Japanese yen, in a flight to safety. If you remember this morning in the briefing, I was talking about the Japanese Finance Minister Aso, and very importantly, he said overnight that they're essentially willing to intervene in the Japanese currency should they see fit, if there is the volatility in that direction emanating from the elections overnight. Therefore, the way that dollar yen has been trading has been generally to the downside when Trump has increased in the polls, and so that kind of risk play is the predominant driver of the Japanese yen. But if dollar yen starts to get hit, if Trump starts coming victorious in certain swing states, I would be very mindful shorting dollar yen, because at some point, if it's aggressive enough, you do not want to get caught the wrong side of the BOJ stepping in and just picking up prices. Because when they do and they intervene, it's a pretty sharp movement in quick fashion. You've got a sharp propensity to get carried out in a move. So just be very mindful of any shorting of dollar yen, I'd say, on a Trump looking like it's going that way. Keep the time frames, the trade execution a lot more tighter. Looking at US dollar for a Clinton win, up versus developed currencies, focus shifts to the Fed raising rates. Don't forget, as much as we've talked about monetary policy and Trump's kind of intention to remove Yellen, which would be a hawkish on monetary policy, actually, if anything, Clinton continuity only means the Fed can go through with their forecast and lift interest rates as priced by the market at 85% in December on the 14th. So either way, you could argue that interest rates are going up, because otherwise Trump wins. If he can remove Yellen, that just means he can have a more hawkish play and foresee that through, which is his view. Or you get continuity, and that means that it allows the Fed to follow their predefined course, of which they've been communicating for the market for a number of months now, that they definitely want to hike rates in December. And as far as the market pricing, that's up in excess of 80%. That is the expectation at this point. On the currency side of things, obviously Mexican peso, they're the guys I feel most sorry for if Trump does become victorious, because it will not be pretty at all. Extrapolated by the fact that everyone knows the Mexican peso is probably the most volatile and potentially then carries the biggest trade opportunity. If the entire investment community then starts targeting one currency, it becomes almost self-fulfilling. And not only is the currency, the peso, going to fall substantially if Trump wins, or it starts looking that way when the swing state starts coming in, people are going to be really hitting that currency hard. I've read a couple of banknotes and they're looking at a currency move in the peso of a depreciation of around 15 to 20%. To put it in context, Brexit was the largest intraday move ever for the pound, and that was pretty much half that if we were looking at the most extreme size of the move. Okay, looking at some of the other assets, US Treasuries, T-notes. If Trump wins, initial flight to safety would drive prices up and yields down. That's kind of the more, classic view. Again, we're looking very intraday here. This might not be the prevailing trend as we go further forward in the days thereafter, weeks and months. But certainly on the night, if Trump starts to look like he's going to be victorious, equities would likely sell off in fairly aggressive fashion, and that's going to be a classic kind of flight to quality bid into T-notes and gold. In terms of Clinton, risk on would drive prices down, yields up. So essentially you kind of get the reverse. You'd come out of safer assets and therefore equities get a relief rally, yields move higher, the dollar appreciates with that Fed continuity we talked about, and bond prices generally move lower, as well as gold doing likewise. Okay, looking at commodities and energy, I think these could be interesting, but I would say are going to be more indirectly impacted and potentially not quite the asset I'd be looking at for the most market movement and therefore potential opportunity. So looking at a Trump win for commodities and energy, very positive for gold for obvious reasons. That flight to quality bid, we've seen that materialize last week when we got up to around 1310 in the futures, and you've seen that reverse when Clinton has now re-established this kind of 3 to 5 point lead in the polls post the FBI dropping that claim. We've gone from 1310 all the way back down to 1280 yesterday, and that's kind of how the assets are going to react, I feel, on this evening. One thing for Trump, anti-Iran rhetoric bodes well for oil prices, is something that some analysts are looking at, i.e. the fact that he's quite aggressive on that particular line might reignite the difficulties in the relationships with the Middle East. That will only probably increase then oil prices. Looking at a Trump win, a couple of things that identified: a climate change environmental agenda is generally bad for oil and coal and good for renewables. So that's probably more of a sector play on a single stock basis if I was looking at that. Emerging markets, negative. Trump win, negative, except for Russia, due to skepticism on trade deals. So people like Mexico, Southeast Asia, China may be most vulnerable. Again, the relationship, I would say, would be thoroughly tested with the Far East in terms of China in particular. And let's not forget, this is a very dangerous country to be playing tit for tat with when they hold an extraordinarily large amount of US debt in treasuries. A Clinton win emerging markets, very positive. We've seen that play out whenever you've seen the Mexican currency move or the emerging market indices in the Bovespa. They've generally rallied when Clinton has had more of a defined lead. So that's kind of how the assets, I feel, will move. And again, everything I'm looking at and talking about right here is about how things will move on the night. Now, there are lots of longer term plays that may be counter to a lot of these moves. It all depends partly on the structure of Congress to how much control does Trump or Clinton, if they're in the White House, do they have to ultimately push through their policies. A couple of other things that I quickly want to share with you before we look at the charts. This is back to Nate Silver, the winding path to 270 electoral votes. You can see here the far right, the most Republican leaning in the polls and on his model, and left Democratic, but you can see the dotted line defining the magic 270 to win the race. And at this point in time, according to Nate Silver's projections, New Hampshire, Nevada, North Carolina, Florida, all leaning in towards being to the Democratic side. So even if she loses Georgia, Iowa, Arizona, and Ohio, she could still quite comfortably, if she picks up those, in addition to the ones that are already more favourably leaning Democratic, win. Hence the reason that she's up at, on his model, 72%. I would say, in terms of the way that assets are priced, 72% is realistic in terms of how the market is positioned for the outcome. I don't think that this is quite as 50-50 as the polls would suggest, or a 3-point marginal win. I think it's a little bit more convincing in how the market is positioned. That does mean then that a Trump win is inevitably going to have a much more forceful impact on the market than the relief that would ensue on a Clinton victory. Maybe not to the same degree as Brexit. The one point I'd like to make is that the market is a lot more prepared now for the what-if scenario. We got completely blindsided as a financial community by the fact that Brexit occurred, and so therefore emotionally, and this is a behavioural market that we operate in, we're better prepared for a shock value if Trump were to win. One of the other things quickly to show you here was that obviously I've talked about the Senate before, and actually looking at these latest models, who will win control of the Senate is a fairly tight run race. Now there is a reason why it's quite tightly run, we'll go into that shortly, but as you can see it's pretty much 51-49. This one chart here I think explains it the best. And what this is here is, on the inside is the current Senate, and the outside is the projection of the next Senate. Now there are 10 Democratic seats up for renewal, there are 24 Republican seats up for election. That means there's more Republican on offer than there is Democratic. Now this is calculation from the polling and the models, and actually, as you can see here, this is the first time I've actually looked at this since Friday, and this has got awfully close. When I looked at this before, these were blues here over the line. So essentially what needs to happen is the Democrats need to pick up, I think it's 3 plus the presidency in order to regain control of the Senate. Now again, this is going to be very important towards, do we have a political gridlock situation with the two chambers, or do we have one overriding clean sweep of control to one party? So definitely this congressional element is something which you should be looking out for. If we go back to Danska, remember the 1-2-3 kind of situation we had in 2012, I would be expecting the same to play out. That being the presidential kind of situation is known first, then quickly followed by the Senate, and then Republicans thereafter. That's kind of how I'll be expecting the night to play out. Okay, a quick few other things I want to look at, and just to remind you, all of this is going to be broadcasted live via your Trading Live platforms. Obviously, a lot of you are going to be in-house, so you can ask me questions in person. I'll be floating about in between the rooms here on the floor. But if you're at home, obviously via Trading Live, you're going to be plugged in, watching me drink probably several litres of coffee as the morning goes on. But at least you can have a laugh at me as I start to look gradually more tired as the day progresses. But hopefully, if it's going to be as exciting as potentially it's looking like it might be, I think definitely there's going to be lots of opportunity with this particular event. Let's move on then quickly to wrap things up, because I know I've been talking for a while, is looking about how we're going to navigate the news. Now there's two real key ways of doing this, and one is I'm going to be definitely switched on listening to the Squawk box on the Trading Live platform. By that, what I mean is you need to have the audio running at all times and the headline feed visible. So first of all, those guys, of course, are watching all of the major financial news. They're talking to brokers, journalists, trying to get hold of information flow. And so hopefully, if they're doing their job right, you're going to hear it first there. And that's going to give you the ability to be able to action trades with a degree of edge, i.e. time. And that's going to be key. What I'm showing you here, I've got up on my screen, is my TweetDeck feed. And I've just set this up for, I guess, a demonstration purpose. And I'm actually going to designate at least 2 monitors to at least 8 different designated columns of TweetDeck. I know obviously screen space is a bit of a premium for you guys, but I'll be doing that job for you. I'll be here calling it. And what I'm going to do, and this is other things that you guys, live guys, can do at home, is of course I've got my own feed here of just general market pundits that I follow, a couple of news agencies and so on. I must admit I have gone back onto the poll of polls on RCP, and I've started following a lot of the ones here, Ipsos Mori, YouGov. You go through it, the actual pollsters, ABC News. I've got a political specifically for the election Twitter account. I'd follow all of those. But what I'd also do is here I've got the search parameters. And so I'll be defining, we've already identified the fact that Florida, Pennsylvania, North Carolina, as we can see here, Georgia, Michigan, these are going to be the places in where the end result is decided. And I remember watching TweetDeck over Brexit, I would say the majority of times I was able to capture the result, whether by a person, whether by someone tweeting from a major TV station. I would say I got at least 75% of the results quicker than Sky News and to TVs by using TweetDeck, and just by using key searches to try and find key swing state names. So that's how I'll be using it. Okay guys, I think that's probably enough then. Let's have a quick look at the charts just momentarily so we can have a look at potential price movement. We've talked about how assets might react. Let's just quickly talk about where these assets might go to. One thing I'd say with the S&P, this is a daily continuation chart. You can see Brexit occurring back on the 24th. So that was here. Obviously a big push lower. The markets from a monetary policy point of view, we've obviously gone through various measures to prop up the economy since then. That level of 2107 provided that double support through October, and we've pushed above there with the gap up yesterday, that positive development with Clinton. Remember, with equities, I would say a relief rally is less potent than the against market pricing Trump victory. Therefore, potential movement to the downside is much larger propensity for that to occur than there is from a rally on a relief of a Clinton victory. Upside, definitely targets here. We're looking at towards the 2200 handle. I wouldn't rule that out, I guess. It kind of depends how things shape. But technically, I don't think that that's unrealistic. And as to, do I not think that definitely a test of 2000 is not unrealistic in terms of a Trump victory? If you're looking at percentage-wise, let's kind of measure that up. I mean, to get from current price up to the all-time highs, we've only got to rally, really, 3%. And if you look at the gap that we had up to the high yesterday, we actually rallied about 2.5. So we've only got to replicate that to get back up to those all-time highs in the S&P. Yeah, around these levels here. On the downside, let me just remove that. Looking at where we are at the moment, to get down to Brexit lows, so that was on the night of Brexit. That's the night of Brexit actually coincided pretty much to the tick to 2000 on the daily continuation. And that equates to around 6%. So if you're talking about a relief rally of 3, I certainly think double that for a Trump victory is definitely a plausible scenario. That will actually be probably a better trading opportunity in some respects, given the size of movement that likely will occur across asset if Trump was to become victorious. So the S&P certainly, I think it's got scope for some pretty big movement. And let's not forget, we've been, apart from this most recent week, fairly confined ranges there over the last couple of months. And this event really is the big one to shape market activity for the next coming weeks and months. Looking at the dollar, or let's look at cable. Obviously a Trump win would be dollar negative, and then upside in cable looks, technically there's a bit of space here. Obviously we come as well in the backdrop of a favourable UK High Court ruling in terms of for sterling easing back of a hard Brexit stance, in combination with a hawkish Bank of England. I would certainly say moves up towards the post-previous Brexit low that we see on the 6th of July and that acted as general support, and it was a trigger of a market break lower back in the beginning of October on that hard Brexit Tory conference. I'd probably be eyeing up there possibly for a move as much as that if Trump was to win, in combination with the more positive UK forces that have materialised in the last week. Technically there's some open air there. Gold obviously has been a very, I would say, sensitive to these developments. You can see here we've had that big gap down yesterday when we came into market, just given the fact of Clinton re-emerging back as the favourite, so to speak, now that that investigation has passed. But we did get up to 1310. Let's just have a look slightly longer dated at gold, where the kind of land lies on here. Obviously post-Brexit, which was here, we ended up hitting a peak really up at 1378 type level. How far this could go, I mean, we're trading, I mean, that would be a phenomenal move for that to happen in one day. To put it in some context, in Brexit, we went from an opening price on this bar on a daily from 53 up to a high. So yeah, $100 we did on Brexit. So $100 from current price would put us, as we say, back up to those highs again. And so, as I say, I think the market's a little better prepared for that eventuality, but you've seen how swiftly gold can move, and I think certainly it could be a targeted asset that a lot of people will be trading if there's a Trump win, or it's looking that way. So definitely don't think you can rule that out, but I'd say the $100 type move we had on Brexit to be replicated could happen. I'd probably put that as a plausible scenario. Maybe not the most likely, as I think that the market is a little bit more prepared this time for the counter or the protest vote to be triumphant. Okay, guys, I think I've talked enough. Obviously, going to be here all day, and then we're going to be back in this evening. So if you're not coming in, obviously trading live, just log on. You can monitor throughout the night. For those guys coming back in the evening, I'll see you then. Any questions in the interim period, just drop them in the chat. More than happy to discuss things further. And good luck. Godspeed.